Yes. What's going on, family? What's going on, guys? Welcome to today's session with your boy Abel. Super excited to be here with every single one of you guys today, family. We're gonna go ahead and get this thing started in about 3 more minutes. 3 more minutes, family. We'll get this thing on the road. In the meantime, in between time, go ahead and drop those locations in the chat, family, because it's the start of a new trading week, and I'm excited to be here because we're gonna have a phenomenal trading week for sure. So we'll go ahead and get started, guys, in just a couple more minutes. Go ahead and drop those locations in the Chizzy chat. Let's go. Yes, yes, yes. What's going on, family? What's going on, guys? Welcome, welcome, welcome to today's session. Super excited to be here with every single one of y'all today. Let's go ahead and turn down this music really, really quickly, family. And let's go ahead and actually get prepared for today, guys, because we do have a interesting stream for today. It is our weekly outlook here, family. So we're really just going to give you guys our opinions and our ideas as to what we believe the markets are going to do throughout this week. I know, at least for me, guys, I do believe it's going to be a phenomenal week. I think that there is a lot of great opportunities that are forming right now in the markets. And yeah, we're definitely going to go ahead and break all of that stuff down in just a few, right? So, like I said, guys, welcome to today's session. It is your boy, good night, fat. It is your boy, Abel Melendez, here with you guys all. And we do have the man, the myth, the legend, my brother Skaggs in the building as well with us today. Right, and you guys know whenever we're here on these calls together, we do provide massive value and a lot of great insights into the markets for sure, guys. But let's see who we got in the building today. Right, let's see the chat, let's see the locations. I see we got Chicago in the building, we got Michigan, Miami, what's up, Bahamas, Trinidad, Alabama, Dallas, Colorado Springs, Swaziland, we got Colombo, Sri Lanka, Stockton, California, Vermont, New Zealand, 518 in the building, OKC, ATL, we got Detroit, Charleston in the house. What's going on, family? We got Sacramento, California in the building, right? Grenada in the house as well. Palm Beach, Florida. Welcome, family, to every single one of y'all that's rocking with us today. Again, super excited to be here with you guys all, right? Now, let's go ahead and go through the actual calendar for the week so that we are aware, guys, of what of the major news events that are going to happen, all right? So that we are not surprised by the volatility that these news events can absolutely bring, right? So going through this really quickly, we're not going to take too long on this, right? But on Monday, nothing too crazy for the most part, guys. We do have a few bank holidays with the New Zealand dollar, right? They have Labor Day over there in New Zealand, so if you are trading any NZD pairs, just be mindful of that. Those banks are closed, right? So whenever the banks are closed, there's probably going to be a lack of liquidity in the markets, guys. So just be mindful of that. Now, we also do have pretty much a bunch of PMI data that's getting released here for the euro and the pound. Now, PMI data, guys, definitely could shake these markets for sure, so just be mindful of that. 4:30 a.m., we could see some added volatility for the pounds overall across the board. Now, going into Tuesday, we don't have nothing too crazy at all. We do have CPI data here for the Australian dollar. Just to see how inflation is from a quarter-over-quarter perspective. So that could definitely bring some type of movement in these markets, guys, overall. So that's what we'll probably be paying attention to on Tuesday. On Wednesday, we do have a very interesting release here, guys, from the Bank of Canada with the monetary policy report. And they also have their interest rate decision. They're actually expecting to raise rates 75 basis points, guys, all the way up to around 4% interest rate, which is kind of crazy. But again, it's the norm now, right? It's what every central bank across the board, for the most part, has been doing, right? They're all raising rates as much as needed to try to get this inflation under control, right? So I'm expecting them to definitely go ahead and probably follow through with that 75 basis point rate hike. So we'll see exactly how the markets react to that, right? Has it been already priced in? Or is it something that we could still see a nice strong reaction from, right? So we'll see overall, guys, on Wednesday what actually happens for that. We do have crude oil inventories as well. And something that might be interesting will be this Bank of Japan outlook report, right? Right now, guys, obviously last week we've seen the Japanese yen gain massive strength, right? They actually ended up getting a lot of strength, guys, due to the Bank of Japan intervening, right? The Bank of Japan is trying to pretty much prop up their currency, right? And in the process, guys, it's giving it some type of strength. Now, is that strength something that's gonna last for a while now, or is it something that could have been, short-lived, right? And that's something that I'm definitely gonna look into as well, guys, throughout today's session, because I actually want you guys to see something when it comes to that, right? This is not the first time that the Bank of Japan, decided to intervene, right, and to try to, strengthen up their currency. It's not the first time, right? This is the second time that they've done it, guys, this year alone, right? So we'll be able to look at what happened last time they tried to do this and use that as a reference or a way to predict what could possibly happen, with the Japanese yen this time around, right? So we'll definitely look into that, guys, and I'm pretty sure we'll have some dope conversations around that stuff, Bank of Japan, and give our opinions as to what we think can happen from that. I know Skaggs has one opinion on the Bank of Japan, which I do anticipate to occur for sure. But I also do have a slightly different opinion, right? And that's why I love these calls here, because it's never going to be one-sided for the most part. We're gonna have discussions, right? We're gonna have conversations. We're gonna have a dialogue, just really trying to come up with the best idea moving forward, guys. Overall, so that's definitely gonna be something I'm interested for sure to see what we can do with that overall. Now, going into Thursday, we do have news and data for the ECB, the euro. The interest rate decision is actually coming out for the ECB. They're also expecting to raise rates around 75 basis points, guys, or about 0.75%, all the way up to a 2% interest rate. But so again, just following suit with what majority of these central banks are doing. So it's not of surprise here, right? All this, all these interest rates hikes that we're experiencing, guys. We have to assume that all of these interest rate hikes are priced in already, right? So we can't try to trade initially off of the release. And there is a chance for us to do it, right? But just keep in mind, right, most of these interest rate decisions, they're normally already priced into the markets, because for the most part we already know that these central banks are being aggressive, that they are focused on trying to fight inflation and things like that. So we just got to be aware of that and capitalize if we can, right? But that's something to keep in mind, keep your eyes on, guys, for this week. On Thursday, the ECB interest rate decision will probably shake the markets for the euro. We do have GDP quarter over quarter for Q3 over here in the U.S. This is going to be very, very important news release, guys, or data release overall. We already know that over here in the U.S. we did have our, the first 2 quarters of this year. We did have negative growth, right? We had a contracting economy, you could say, right? Which technically sent us into a quote unquote recession. But now, right, if we go into a third quarter, right, if we have a third quarter, guys, of negative growth, right, then there's no doubt in my mind, which I already know we're in a recession, right? But that's when you're really probably going to start to see it all over the news, right, where they're going to stop trying to redefine what a recession is, and they're just going to pretty much say it like, yo, we're in a recession, right? So that's going to be interesting to see. As of right now, guys, they're expecting it, right? At least, whoever came up with this number, they're actually expecting growth, right? They're actually expecting expansion, right? So we might not even see a third quarter of negative growth, right? Based off this, it looks like we're actually going to see some type of growth, right? So that's going to be interesting. Now, when it comes to this GDP, guys, and really trying to figure out sentiment in the markets, if GDP does come out and it shows that we are expanding, right, as an economy, right, that our economy is growing, we have to really understand how to interpret this now, guys, when we're looking at it from a sentiment standpoint, right? Because if the main objective for the Federal Reserve is to fight inflation, but we're still getting reports, right? We're getting a GDP report that shows that our economy actually expanded, right? It actually grew. Then, we have to look at how the markets is probably going to interpret this, right? If we do come out positive, right, if we do come out around this 2% GDP number, then we're probably going to see the markets, guys, react very, very aggressively to that, right? Because that's not going to help fight inflation, right? That's not going to help with the Fed's goal here of, trying to slow this thing down, right? We really do want to see, unfortunately, we do want to see another quarter of negative growth, right? Because negative growth means less spending has been occurring. Less spending occurring across the board can obviously help with, the demand for goods and services, which is going to cause inflation to turn around, right? So if we do see this number at 2% or anything above it, then we really might see actually a negative reaction to that, right? So that's something we're going to be keeping our eyes on, guys, for sure on Thursday, because, yeah, that could really shake the markets 100%, right? So we'll actually probably end up actually, trading, and we will be live anyways for this, right? Looking at this and trading it live during the New York session. We do go live, guys, every Tuesday, Wednesday, and Thursday inside of the Profit Society platform, right? In New York session, this entire week, it is going to be for free, right? I don't even know when we're actually going to fully launch, right? But until we're actually officially launching, guys, every New York session that we host is going to be for free, right? All you have to do is be a member of the platform. The platform is free registration, right? So go ahead and join if you're not a part of it just yet, guys. ProfitSociety.co. Go ahead and lock in, and yeah, we'll see you during New York session on Tuesday, right? But again, we're able to trade, GDP live together, right? And really, see how the markets do react to a lot of these news releases, guys. So that's going to be very interesting as well to keep our eyes on. And then we do have more monetary policy statements and outlook reports for the Bank of Japan. Again, that can give us some insight as to what the Bank of Japan's plans really could be moving forward. And then going into Friday, guys, we do have CPI here for the euro, right, which again could shake up the markets for sure. And then we do have some core PCE price index and GDP numbers, right? So that's our calendar for the week. So we do have a few different things, guys, in terms of interest rate decisions across the board from the Bank of Canada and the ECB, right, the European Central Bank. So those are things we have to be aware of. But then we also do have that GDP for the U.S. on Thursday. All right, so interesting week ahead for sure. Right now, what I want to do, right, is I actually want to get the boy Skaggs' opinion on these news releases to see which ones he's going to be eyeing more than anything, and to see if he has any general thoughts and ideas around these data that we have coming up this week, right? So, my brother Skaggs, what's going on, King? I hope you're having a phenomenal night. But are you there, my brother? Let me make sure that he can even hear me. Are you there, my bro?
Yes, sir. Yes, sir. Yeah, I can hear you. You can hear me?
There's the go. Of course I can, my brother. How you feeling, bro? You feeling good?
Yeah, I'm feeling pretty good. I've had a busy weekend myself, but nonetheless, I'm here ready to get this working and hit these markets, man.
Let's get it, bro. So, just based off the data that we have coming up this week, bro, is there anything that stands out to you that you're gonna be focused on?
To be honest, bro, there's a lot this week in
Yeah, there
terms of
is.
foreign currency news. There's not much for the dollar. I mean, we do have that GDP. I think they're being a bit ambitious with that 2.1%, to
I
be quite
agree.
honest with you. Um, Not that I specifically I mean, it would be great to see it come out as negative, but I mean, if they're forecasting 2.1, probably tells me we're not going to hit 2.1. We will probably end up positive. That's probably just like, to me, that just, says that, hey, we're looking at a positive GDP, and they're just being really ambitious in that forecast number. Um, as far as like spending and stuff goes, I mean, a lot of companies have been cutting costs. Does that translate into spending? I don't know. Maybe there's some pre-holiday shopping going on. Again, we do expect holiday rallies. It has been a big point of me being long a few of the assets that I'm long on. So I wouldn't mind a positive GDP. And remember, GDP. How many times have we got it for quarter three? This is the first number for quarter three. 'Cause the number comes out like three times.
Yeah, I believe this is the
And it gets
first
it
one.
gets adjusted three times throughout the quarter. So I believe, if I recall correctly, this is the first time for quarter three that we're actually yeah, see, so October, yeah. So if you guys noticed, right, how the quarter two numbers come out three times, they basically just update you as the quarter kind of goes through on like where you are. So again, I wouldn't be surprised that this number comes out a little bit higher just to add fuel to this, holiday rally.
Hmm.
So yeah, I wouldn't be surprised to see a positive number. That's basically basically my whole point there. I
I,
wouldn't be surprised to see them kickstart this up at a positive number and then see where we end up post holidays.
yeah.
So that's my thought there. As far as, I mean, we have a lot of other news. There's the Bank of Japan news, there's the ECB. I think there's even, what is there? Yeah, Canada interest rate decision. So to be honest with you, I might even lighten up my week.
Hmm.
I've had a fantastic the last 2 weeks. There's really no reason for me to give money back by playing on what's going to be a pretty volatile week. I mean, all throughout, yeah, pretty much Wednesday, Thursday, and then into Friday is going to be pretty volatile. So that's what this calendar tells me, guys. Sometimes you got to look at this stuff and say, hey, you know what? It's better if I just consume all of this data, find out what the facts are this week, and then have a really smooth following week, right? Rather than trying to play in the speculation of all this stuff, because this is all going to swing back and forth. The Canada interest rate decision, that's bullish CAD. Again, will that hold? Like you said, it's probably pretty expected. It's probably pretty priced in. That also gives some insight to what the Fed might do because they've been kind of back and forth on their rates. So a 75 basis point hike at a Bank of Canada probably also means the same thing from us. So that's what I'll be looking at. And then specifically, I'll be paying attention to that ECB monetary policy statement. I would like to see the ECB get more aggressive, and it looks like they're actually going to. They're doing 75 basis points this time. So for me, I am long EU, so I would love to see some bullish news out of that. But generally speaking, don't be surprised if my week is pretty light, because like I said, I had a good last 2 weeks. There's no reason for me to mess up my month here.
Hmm. Yeah, nah, I mean, you did make a good point though. There is a lot of news for sure on the radar that we have to be aware of going into this week. Just one thing too that you said about holiday spending. That's something that we do have to be mindful of, and not just that, guys, but this entire week. Although again we are technically trading currency, right? Forex, we're not really trading stocks, but you gotta understand, this is a crazy, crazy earnings week as well, guys, for a lot of the major stock players out there right now. Depending on how these big boys like Apple, right, and these like these real blue chip stocks, right, depending on how they do for earnings, that could influence, guys, what these currencies could do, right? We need to stop assuming that the stock market has no say in what these currencies are going to do. That makes no sense, right? Because if we do get a strong earnings from a lot of these big boys, guess what? That's gonna make these indices probably pop, right? Bring some strength, which is gonna weaken the U.S. dollar, all right? And then you understanding how to play those correlations can absolutely, give you a lot of better positions, guys, for sure for this week, right? So that's just something to keep in mind. It is earnings week as well for a lot of big boys out there, and that could also really bring some movements in the market for sure, right? But that's just a few things to keep your eyes on, guys, for this week. Overall, it's definitely going to be a very interesting one, all right, for sure. All right, so to start it off, guys, you guys know me. I want to go ahead and take a look at the U.S. dollar. Right now, let me go ahead and just catch up with the chat. Let's see what we got here. We got Sydney in the house. What's going on? What's up? What's up? Check out AU. Let me hear your thoughts. My entry, nice reaction. I got you, Eric. What's going on? Shout out to you, Eric, for tuning in. We got Linda in the building. What's going on, Linda, from New Jersey? Shout out to you as well. Family, go ahead and smash the like button if you guys do not mind. Right, it definitely helps us out. Right, if you want to support us, then simply just smash the like button, and that definitely does support us more than you guys may even know, right? But let's go to see what we got here, guys. So overall, we did actually have a very interesting week last week. If we're being honest, we really didn't do nothing too much, but we did end up seeing a lot of selling pressure overall to finish out the week. And I think, guys, at this point, we're probably going to experience some more selling pressure here for the dollar index. I think for right now, we could definitely see price probably push a little bit lower. My guess will be towards that 110 50 level is where I would really like to see price reach towards. Right. So if we can see this week, guys, yeah, I think that this week we're going to be able to target down to these lows. All right. So that's what I'm going to be looking for. And then once we do get down into these areas, guys, and maybe we go ahead and fill, this imbalance, something like that, right? We might be able to start looking for some potential longs again, right? Because overall, this market is still very bullish, right? I mean, the dollar has not really. I mean, we have been a little sideways, choppy over the past week or two, guys. But for the most part, we're still very much bullish here, right? Like that has not shifted at all just yet from a structural standpoint, a technical standpoint. So I'm still just keeping that in mind when I'm analyzing the markets overall. Because when we do get down to this 110 level, there could be a chance for the market guys to really find some more demand for the dollar, and then we do start to see higher pricing from there, right? But for right now, let's not even get ahead of ourselves. I think that we could really start to see some lower pricing overall. So if we can see the dollar guys come up and rebound a little bit, then we might be able to see this thing go ahead and start to turn around and go back lower, right? So that's what I'm looking at for the dollar to start the week off. How it actually ends the week, we'll see. All right, but for the most part, this is what I really would like to see this market do something like this, right? We ended up running these highs, completely shifted, broke structure. So if we could pull back up, then I would like to see a follow through here for the downside, right? Now, I know some of you guys are probably thinking, especially if you're newer, hey, well, man, do you actually trade the dollar? Well, no, I don't. right? But I do utilize the dollar as a way to tell me what all the other currencies are going to do, right? The dollar correlated currency pairs are going to do, all right? So for this example, guys, if I believe this week we're overall going to be having a bearish dollar, right, then very simple, how do I play that? Well, if we have any pairs that begin in USD, right, then guess what we should expect? We should expect those to go up, right? And if it ends in USD, then we should expect these pairs to go down. Why is that? Well, we have to understand, guys, that the dollar is the strongest currency across the board, right? It's the number one currency in the world. It's because it's the currency reserve of the world, right? Majority of transactions that happen in this market, guys, are almost mostly US dollar, right? So it holds a lot of weight in the Forex space, right? So if we can figure out what that dollar is going to do, it's going to pretty much give us an insight, guys, as to what all the other correlated pairs are going to do. Okay, analyzing one chart could tell you what Euro USD is going to do, GBP USD, USD JPY, USD CAD, right? For the most part, it should tell you what all of those are going to do as well. So yeah, that's how we're going to play it. I think that we could see lower pricing after some type of a pullback and then go ahead and go short. Right, now let's go ahead and take a look at some actual pairs that we can actually trade, right? And starting off, guys, with Euro USD. Okay, one thing that I love about Euro USD, for those of you guys that are not aware of, it does the exact opposite of the dollar, like the exact opposite of the dollar, right? And if you know what the dollar is gonna do, then you should know what the hell Euro USD is gonna do. Okay, so overall, guys, yeah, we have a interesting opportunity here for Euro USD. I'm very interested in seeing it run these highs over here, possibly even come back all the way up to these highs. Um, yeah, yeah, I like something like this, right? But for the most part, guys, I would like to look for the buy setup for this week, at least for this week. Okay, but that doesn't mean I'm just gonna buy from right here. No, right? I will need to see some type of a pullback, and then from there we can go ahead and start looking for some opportunities to go ahead and go long on, right? Well, let's go ahead and go lower time frame so that I can see if I can find you like a real level that will make some sense, right, for us to actually look for some longs from. Well, we do have this level of structure right here, guys. That could be an area where we do have some liquidity, right, build up below it. All right, so seeing the market maybe spike below this level and then rebounding, that can give us a nice opportunity to go long, right, for the euro. That's a possibility. But what I'm more so looking for is not really that play. I'm not interested. I mean, if it shows, I'll take it, but that's not the real play I'm looking for. I'm more so interested in seeing how we react if we're able to come back down to these lows. All right, I would love to see Euro USD come down to here first before we actually go ahead and start going bullish, right? I really want to take advantage, guys, off this last little sell-off that happened, right? Last sell-off that broke structure and got completely erased by the demand that the euro had. Right, so if we see evidence in the past, guys, right, that there was a lot of demand for the euro down here at this 0.975 level, right, then that's probably a good area for us to expect some more demand to come back in, right? And if it doesn't happen, then we're probably just going to continue anyways. But for the most part, there is a good chance for that to actually play out, right? So that's something I'm going to be keeping my eyes on, guys, going into this week for the euro. If, again, I'm not sure if we're going to get down there, but if we're able to make it to around this 0.976, 0.975, I'm very interested in looking for, some longs from that, right? Then we can go ahead and target, back up to that 0.99 level that I'm very interested in price reaching, right? So not bad overall, guys. We are talking about a 3-to-1 risk to reward, right? Not the best risk to reward, but it's also not the worst, right? As long as it's a 2-to-1, then it fits my books, right? But typically we do get much bigger risk to rewards than this, but for the most part, this is not a bad one. With keeping the stop loss around 48 pips, just a little bit of a wider stop loss, just because that's where it's supposed to be. All right, so that's definitely one I'm gonna be keeping my eyes on overall, guys. I would love to see price come down here. If we do, then I'm taking that all day long to the upside. All right, so that's gonna be one I'm keeping my eyes on. Another one that I'm also gonna be watching, guys, is gonna be gold. Right, gold is very interesting as well. I think we could see a little bit higher pricing here, guys, for gold coming up into this week. I think there's a good chance for us to actually go ahead and run the 1684, 1685 level here for gold. All right, so yeah, I want to set myself up for the next opportunity to go ahead and potentially buy it. Right now, where can we actually look for some longs from? Where can we actually go ahead and look to buy it from? Well, if we can see price come back below, maybe towards this area down here, I would be interested in it. Right, maybe around, yeah, I would say around this level. Right, might be not a bad play. So around the 1645 level, guys, would be very interesting for me. Right, if we could see gold. Let's see, audio very low. Let me go ahead and turn on my audio. Let's see. Right, so if we can see gold make its way down into here, right, I think there could be a very good chance for us to really find some support to then go ahead and go bullish again, right? Somewhere in this area, guys, 1640, 1645s, and then go ahead and target, right back onto the upside, right? So, yeah, around that 1640 level is really where I'm gonna be keeping my eyes on. I'm gonna be focused on that level, so around 16, yeah, around 1640, 1645. I know that's definitely a little bit of a wider range, but that's just where we want to start watching, right? Once price gets into that area, start to look for bullish reactions, right? Bullish structure, right? The shift in structure, right? We see the little structure pattern, we see the shift. That could be our entry, and then we go ahead and start riding that up, right? So that's gonna be something we keep my eyes on, for sure, going into this week as well, right? That 1640 level is going to be a juicy, juicy level in my opinion, right? I think that level is really going to be a level that truly does hold, right? So that 1640 is going to be super interesting, guys, for sure. Right, so that's another one we keep my eyes on going into this week. Now, for the most part, guys, what I want to do as well, right, is I actually do want to make sure. Actually, I'll do that. I'll do that before we end, right? Because I do want to make sure that we do go ahead and choose the winner, right, for the currency pair of the week that we actually hosted last week. All right, and that currency pair of the week last week, guys, was Euro Pound. Right, so by the end of this session, we'll definitely go ahead and I'll make the announcement on who we actually are choosing, and then after that, we can go ahead and choose on what you actually want to choose as your gift or your prize for winning. Right, but we'll do that a little bit later on, guys. After Skaggs breaks down all his stuff that he wants to go over, right? But for the most part, those are gonna be my things that I'm focused on, guys. It's gonna be Euro USD, and it's going to be gold for the most part to start off this week. And then throughout the week, we'll monitor a few of these other setups and see what the market does end up giving us overall. But besides that, I do want to go ahead and pass it off to my brother Skaggs so he can go ahead and break down the markets and give us some insights as to what he's looking at.
Yes, sir. All right. So, family, let me just get some ones in the chat if you guys can hear me loud and clear. I want to make sure the audio is good before we get too deep into this stuff. Right. So let me get some ones in the chat if you guys can hear me, if you guys are with me. And we'll go over again. Like I said, I'm gonna keep my week kind of light. I'm really gonna just update you guys on a lot of stuff we've been doing the past week, and whether or not I'm gonna continue to, how I'm gonna continue to manage these positions, right? Because I will to some degree be looking to hold throughout this week. All right, cool. So the chat's got a bunch of ones in it. All right, let me hijack the screen here. Let me see. Let me see. All right, cool. So you guys should be able to see my screen up there in just a moment. And yeah, we're gonna jump in. We're gonna start here with this Euro USD. As you guys know, we have been trading this to the buy side basically since 5 minutes after CPI, which was about 2 weeks or so ago when it was down here at this 96.30 area. Again, as most of you do know, we are looking to continue to see if we could ride this out up to some of these parity levels. Possibly 102 was an area of interest for us to come back to. But I do want to highlight again that what I'm looking at now, being that we've kind of sat here for a week and a half, 2 weeks, and the way we closed on Friday, right? On Friday, we had actually a pretty good end of the week. We did see some, sell side. Again, we closed out of a lot of our old positions here. Even this one on the chart is no longer on there. So I'm just kind of holding my main position still. And we did try to break up on Friday, right? There was a lot of buying efforts that came in Friday. Again, we could see the nice reaction from price. But for me, it's really going to be about whether or not we get any sort of follow through after this break. right? So the question that I'm basically going to be looking at early week is what's happening up here? Is this some sort of, reaccumulation for us to continue higher? Or are we going to basically erase this move from Friday? And my thought process is that if we do erase these moves from Friday, that the party for taking the dollar, to the downside could potentially be over. Now, again, I'm not going to lean towards that, but I am exploring that as a possibility based off what I see happening here, right? I did see us again try to break an area of resistance on high effort, and we have basically failed to do so. Now, I'm going to take this for a grain of salt because this was the Sunday open, right? This did happen literally at the open, right? We gapped to the upside, basically grabbing this liquidity. So that's why kind of this is like a question mark for me because again, it could just be Sunday action, right? We opened up a little too high on the week, we faded off, and then maybe we can recapture this Monday, Tuesday. It's always a possibility. But I'm going to be watching what happens up here rather closely. Again, if we do attempt to continue to move up past this Sunday open, and we do so on like less and less volume, and we don't really look like we have any sort of power behind it, I may begin to scale out more of my position from down here, right, and start to make some adjustments. So again, the next time that we come up above this 98.75 area, I'm gonna be paying a lot of attention to the intraday action that happens up here. And if a lot more selling pressure does come in, I might have to begin to, hedge out of my position, maybe even take some sells. But yeah, I'm going to be really interested on what happens up here. Now, again, we do have big news, right? There is news. I think it was Thursday, if it were Wednesday morning, for the ECB monetary policy. I have to look at the calendar again for the exact day. Irrelevant in the current discussion, but I do want to see what happens with that. Again, they are expected to raise rates this week, so again, I want to stay to the buy side off the rumor that they're going to be raising rates, and I will look to probably exit my position as they do that, or depending on how fast price is running beforehand, even up into it. Again, I am a fundamental trader. I base a lot of what I do in fundamentals, but I like to delve into the rumor side of fundamentals, right? So I like to play things before they come out, and then as they hit the market, that's already kind of where I'm scaling out of my positions and letting some of the dumber money make help my exit. So if the rumor again is that they're going to be raising rates, right? That's or not even the rumor, that's really just the expectation at this point. If the expectation is that they're going to raise rates, then my expectation is that we're probably going to be bullish up into that news. And then once that news hits, that's going to be a liquidity exit for most of the people, again, like myself, that were playing that all week. So there's really nothing on this 4-hour chart other than, taking out this wick that's really going to convince me. Like Abel kind of broke down on some of the lower time frames here, there are some nicer areas if you want to try to get into buys. However, for me, the more of this move that we erase, the less likely it's going to go up is going to be. So shallow retracements here for me. I'm not really looking for this to dip too far. Maybe back into this reaccumulation over here. I know a lot of people are going to be looking at this area of imbalance. Preferably, again, as somebody who's already along this market, I really don't want to see price dip too far below this, right? So I would love to see liquidity below here kind of taken and us get initial reactions. That would be ideal. However, again, I don't think that's what we're going to get. We're probably going to get a little breach of this level, and we're probably going to come into some of this lower area. Did I not grab the right tool? I did not grab the right tool. Let me just delete those real quick. There we go. I do believe we can liquidate out this candle. So I'll be looking at 97.88 and below. Basically probably on a fill of this wick into some of this structure. So again, if some of you guys want to again look for reasons to go long, this 98.75 area when maybe stops again, the action that happens down here is really what you're going to want to base your stop loss off of. I don't like to delve into this Sunday nonsense where you have to have strict levels on a Sunday, right? The market is going to show you what it wants to do once it gets down here. But again, I wouldn't be risking more than like maybe 25, 30 pips on this at most if I was gonna again give you guys an ideal setup. So hopefully that is what we get this week. The most important thing is I will be looking for exits on EU up into the news. And for me, again, that's probably going to be as close to this level as I can get, right? As close to this parity level and 99.77, 100, right? Up in this supply as we take this. Now, whether we hold below this structure, right? Say this, I know some people are going to look at this as an order block. It's not an order or not an order block for me. It's a continuation block, as I call it. So I would expect it to push right above this high at 99.77 and then drop, right? Kind of holding this structure, but grabbing the main supply as deep as it possibly can. And that's where I'll be looking to make some of my additional exit this week. So again, I'm not really looking to take a position. You know, the setup at 97.75 is there, right? That could be some potential. But for me, it's really going to be about exiting some of my pre-existing euro positions up at this 99.75, and then just watching what the ECB wants to do going forward. Right. Once the ECB comes out and they do that 75 basis point hike and they're at 2%, there really won't be much left to look forward to out of the bulls unless it's very specifically continued dollar weakness, which again, heading into November with the Fed meeting coming up and the likelihood that the Fed's going to begin to increase rates, I just want to exit my positions. I just want to find a reason for me to get out of these at a slightly better price than what I probably should have just took, earlier this week. So again, like my week, if I had to draw out my little ghost feed for you guys, would be again maybe a little bit lower. All right, get some nice. Did I just mess that up? I just messed that up. All right, a little bit lower. Maybe you guys can get an entry. And then as, again, we move up to here is where I'll be looking to take my profits because inevitably the Fed will come back swinging in November. They may make some comments. I don't know if we have projections in November. I don't think we have projections until 2023 at this point. But again, the Fed coming in with additional rates in November is good reason to get out of these positions. Same thing with NASDAQ. I know we've been looking again. I've been eyeing this 11,800 area for what is now 2-3 weeks. Again, I am long this market from 10,467 and 10,700. Again, this Friday price action had a lot of volume behind it. In this case, we actually have held above structure, surprisingly enough, on NAS. Right. So again, I'm going to be looking for the same thing. Very, very preferably shallow retracements up here and continuations up into these areas for me to exit my longs. Right. I wanna get out of longs. That's my focus for the next week and a half is me exiting my swing trades. Right. You guys hopefully been riding these with me. I know very few people have. Very few people have the discipline and patience to hold for 2.5, 3 weeks, 4 weeks. But for me, it's not really about entering the market as much as it is beginning to exit, and watching up here for again potential entries. Because if I'm gonna exit my buys, I'm also gonna be looking for shorts. So yeah, I know we've been talking about holiday rallies, holiday rallies, but the way I kind of see the market is again we push up, overextend ourselves, kind of come back, correct some of this, and then we could do it again another final holiday rally, which will probably take out these like November highs into December, and then we'll probably fall. So it's just like I see over the next week and a half, an ability for me to make an exit, fade off that. A lot of people are gonna again chase the holiday rally, let them all get liquidated again. Come take some of this structure, take out this wick. This wick is again like it's a shorter term strong low, as Ray would call it, but I don't think it holds over the next course of 2-3 weeks. So I kind of think the market leading into the holiday rally is just going to take liquidity on both sides. It's going to take liquidity here. It's going to take liquidity here. And you're kind of going to get like these exaggerated moves into that next Fed decision. And again, that's the same thing. I expect that a Euro USD where you kind of come and you take, again, some of this liquidity up into here, and then you come back for this play between the structure, then again get that later holiday rally. So that's really what I'm looking at on those.
Yeah, yeah. Just to touch on NAS before you go to the next thing, right?
Yeah, what's up?
Since we do have earnings report for the Amazon, we do have earnings report for Apple, right? All this week. That's obviously gonna affect NAS, right? Um,
Yeah, absolutely.
how much do you think is gonna affect NAS is the question, right? Because obviously those are like the big boys inside of that basket, which makes up NAS, the index.
Yeah, I mean, again, that is again why I lean towards me making an exit on the next bullish run. Because I think those earnings will contribute again to a stronger indice, which again translates into a weaker dollar.
Hmm.
Because again, as you sell your dollars for an asset, you sell it for a stock, right? So it's
Yeah.
that inverse correlation exists. I do think that they will report better than expected earnings. Um, there have been a few headlines that I've seen. I know, I don't even know if Netflix has reported recently. Maybe that's where this number comes from. Let me just see. Usually, yeah. See, so Netflix recently reported, and again, see, like there is strong reaction from that. So I do expect anybody that does have earnings this week to again follow that same kind of trend. Like here's Apple's earnings, which are not even until Friday anyway.
Yeah.
So these are kind of like late week stuff. Yeah, all this stuff is happening at the end of the week, which is
Yeah.
just kind of
I
funny.
think Meta's on Wednesday too.
The meta's on one. Yeah, I mean, it's all going to be throughout the week. Yeah, this is Wednesday. Yeah, so
We have a crazy
there is
week
big
though.
earnings coming in this week. I would expect them to be again like a lot of these companies have kind of cut costs, right? A lot of them have laid some people off. They've reduced costs. So is it really that they're making more money, or is it just like they increased their margins a little bit?
Mm.
Um,
Mm. I
and
like that.
I and again that's going to be shown in the data,
Yeah.
like Netflix specifically. Netflix, they targeted people that were sharing accounts and whatnot, so they seen like something like a 2.5 million subscriber jump because people were no longer sharing accounts and had to get their own account. So they have again specific data, but that's kind of like it's like, okay, cool. So that helped them out in the short term, but how long is that going to hold, right? Like, cool. That's kind of like a one off. Like, we did this thing, we got a result from it, but it's like, unless they do another thing that gets another 2 million subscribers, like, that's not sustainable. It's like, okay, cool. They capture 2 million more people, but, that's it. So again, I think some of these earnings do come out relatively positive, but I think the market again is going to, after the earnings come out, they're going to look for what? They're going to look for the next thing, right? Because once that news hits, that's the news. You guys know. I always say, okay, cool. The news just came out. What's the next thing the market's looking at? Because the market's always looking forward. It's never looking behind it. It's never
Mm.
looking behind. So once these earnings come out, even if they are positive, you might get like a good 1, 2 good strong days of trend, but the market will eventually look towards that incoming Fed hike. So again, I'm hoping the earnings pushes us higher. I do because I would I would love to exit my positions at higher prices.
Mm-hmm.
And again, I'm not going to fully exit. I'm going to leave my 10%, 20% final remaining. It's just that, again, I have my positions in from here, which should have already been closed, but we had a strong Friday, so I left them in there. Um, and these are still like 70% open. So I need to close a vast majority of this. And because, listen, I want to do some holiday shopping too. So, you know, I'd rather pull my money out and go enjoy it for a bit. But yeah, I do agree with you, bro. Because of those earnings, we could see some strength here.
Mm-hmm.
I just think it'll be short lived. And keeping in mind those earnings are on Friday, so it's possible again that you get a strong weekly close and you don't get that sell off until next week. Just to kind of throw that out there. Oil, I remain bullish on. I see no reason for me to close oil. Um, Yeah, I mean, oil is the only thing I'm looking to swing to the moon. You guys know that. We went over this a bunch of times on here. You guys go back to last week's Sunday call, the Sunday before that. I'm very bullish on oil as long as war is looming over, everything. The Russia-Ukraine situation, specifically the China-Taiwan situation will rapidly increase in developments in the next like 3 to 5 months. Again, I'm not like a China expert, but um, they did some interesting stuff over the weekend. If you guys are aware of that or privy to that, um, things that people think maybe don't matter, and maybe those people are right. But I like to delve into conspiracy theories, so I think some of the power moves they made in front of the press this weekend have underlying meanings that they will be pressuring into Taiwan soon. So I remain bullish on oil for that reason. Technically, again, we've tried multiple times to come to the downside here. Price continues to fail, buying volume continuing to tick up. Anytime the sellers come into the market, like you have here, they're just not able to capture the move. So as far as I'm concerned, again, the bulls are still in control. I still look for higher 90s, still looking overall for 102 into like 107, 108. I mean, you guys know I'm very, very, very much bullish oil. And I will remain bullish oil as long as my positions are not broke even. I'm not looking to take any profits on this stuff. I'm letting these ride. I pushed the button. I got my risk rewards in there, and that's the end of the game on oil. I would love to see us close this week, however. I would like to see us close this week with a test to 89. Right? If we can't get demand above these wicks here, if we can't push above this area on continuous higher demand or higher effort or higher volume, then I will maybe have to readjust my thought process. Because again, a lot of my bias here is based off the volume, right? Every time selling pressure comes into the market, it gets absorbed, right? So high selling pressure, high selling pressure. I mean, these are relative. They were high selling pressure when they were developed. Again, but the buyers look like they're ticking up. So what I need this week from oil is I need a push above these highs, and I needed to do so on increasing bullish volume. And again, you guys should already be in these trades. You should be in these trades from 83.25. You wouldn't be in from 82.60, this lower level, unless you took it yourself, because I did not call that on stream. This was the on stream entry. So if you're still in from 83.25, we remain bullish. Now, if you're not in this and you want to join me in this, yeah, you might not even get an opportunity, to be honest with you. Yeah, you might not even get an opportunity. This is like the only inefficient price action area. The rest of this is like very efficient. So maybe you get an opportunity. And I wouldn't even want to see price do this, but maybe you get an opportunity below this inefficiency. And maybe you can play some risk to reward. My only problem with this is like if you come back for this inefficiency, like what's stopping you from taking these equal lows? And then it's like, what's stopping it from just maybe playing into like this block? And then if you want to like again keep breaking that down, like the further you fall, the higher the risk of you taking just more and more and more levels. So I would actually see this as an imbalance that I would prefer to not see filled. I would prefer to us keep trading with this really efficient price action. Again, maybe break above here, and again close some of this stuff out. So preferably speaking, you guys don't get an entry. I'm sorry to say that, but it's what I would prefer to see. I'd prefer to see it not come back down, but I could also see the logic behind it coming to fill this imbalance. It's just not what I would want to see. And then the only other thing, which I know everybody wants to talk about, is the yen pairs. All right, which I don't even know what they're doing. All right, they're so these had an interesting open. First off, let me just go to the chat real quick. Let me just keep up with the chat. Did you already go over gold? Oh, I didn't go over gold. We are in gold too. I will go over gold as well. Can we please look at Euro AUD? Not a pair that I trade, but we could possibly take a look at it. Keep buying the chopper first in the chat. I'm with you, bullish oil. Let's go. Good thing I'm with you. Yeah, if you guys are in a trade with me, drop what pair you're in with me. Right. If you guys were on any of the live trading sessions the past 2 weeks and you hold a swing trade position with me, let me know what it is in the chat. And the only ones you could be in on would be EU, NASDAQ, oil, potentially gold if you guys listen to me carefully on gold. You might even be in GJ. You might even be in GJ. Doubtful because of the way it opened up this week, but you could be. So Warren's an oil, right? Shout out to you, Warren. Free Zone says oil and GJ. Veronica says I'm with you on oil. Okay. Anybody else? And this is what I'm saying because I definitely know there was like no less than like 25, 30 people in EU and NASDAQ with us. Notice how there's nobody in EU and NASDAQ no more. A lot of people still in oil. Oil is a pretty recent trade. Gold, I'm going to swing by. Okay. GJ. So a few of you guys are in this GJ with me too. Okay. I'm surprised you guys are in GJ with me because the way this opened up this week was pretty crazy. So just to kind of refresh your guys' memory, we did talk about it last week. I was taking shorts in this area here. I also had shorts from the upside. We were targeting a fill of the 4-hour wicks over here. And again, I told you guys a lot of this analysis was because of the weekly time frames, the run of these, multi-week highs. And we just seen that we had really efficient price action up here. And we were trading into these wick fills. And I also went on a little bit of a rant, with this. And I told you guys again, like the ability for this thing to move down is going to really be dependent on whether or not the Bank of Japan intervenes. And some of you think that I could tell the future because that is precisely what happened. Was the Bank of Japan intervened, right? So they jumped right into the market the next day after me going over that rant and kind of giving you guys this entry. We did talk about how I wanted to see it, push up into this inefficiency. And then as long as that we, kind of held this structure, we would be looking to short it into that level. Well, I mean, this couldn't have worked out any more perfect. It absolutely pushed up into the entry at 169.42, held that structure, and then the Bank of Japan, with its perfect timing as always, well, maybe not as always. They're not always so nice to me, but they were very nice to us in this case, where they came in, they intervened into the markets with some bond buying and some reallocation of USD assets. And we absolutely collapsed and tanked right into that TP area. I did end up closing some at the end of Friday into this area here. Just because again, I wasn't trying to hold over weekend risk on my, kind of worst positions and whatnot. I had to kind of chase this market a little bit. So I did take my worst positions on Friday, which is a beautiful decision because we opened up a whopping like 100 and something pips, like 130 pips higher, and then immediately shot even higher. My positions that were up here that I didn't take profit on did get knocked at break even, unfortunately. Luckily for me, I checked the market every day 5 minutes after 6 o'clock, and I actually ended up grabbing another entry up here, which only like 15, 20 minutes later did it fall again on a good 300 pip drop into this liquidity pocket down here. So I did book a little bit more partials today. I'm already smacked a good 350 pips on 30%, and I hold the rest at break even up here. So I once again am long-term short on GJ from up here. Now my thing with this is, again, the yen, even though they intervened into the market, these are like they're almost temporary, they're temporary measures is what they're doing. Right, they're like slowly beginning to shift sentiment, and my confidence in their sentiment shift is very high. Like I know the Bank of Japan, again, within 6 months likely will very likely, almost guaranteed in my opinion. Again, nothing is guaranteed in finance, but based off everything that I know about, economics and watching what the Bank of Japan's been doing and kind of like being ahead of when they're stepping in the market like this, I do believe that they will leave that negative rate territory. Now, does that mean that it's gonna happen before we take these highs? I don't know. I'm gonna continue holding my partials because that's just the type of degenerate that I am. However, again, if we do break these highs and we break these highs to the left, I'm not gonna keep trying to short this thing. Right? I'm gonna wait until again it becomes more logical to do so. Right? When they have another CPI reading, when they do have additional stuff, and again, they have monetary policy this week. It's very likely that the Bank of Japan, in their monetary policy statement this week, says the same thing they've been saying, which they will just be keeping rates as is and for the foreseeable future, right? They use some like crazy wording like that. Like there's like, we're just gonna, keep them negative, and that's what we see. There's a possibility they go against that. I'm rooting for that possibility. However, I don't know if I expect it just yet. I think it doesn't come until we hit about a 3.5% inflation, which right now they're at about a 3%. I know 3% is the level we've been talking about a while before we started seeing them shift, but I think they'll hold kind of firm until it starts to go over that 3%. And then once it gets over that 3%, they'll start to again switch their tonality a little bit in their monetary policy statements. So again, if you're in GJ with me, you should please remove your risk. Don't be stupid. Don't let these trades go negative. Taking logical re-entries, again, for me, I'll keep playing every swipe of liquidity. And for me, I seen the swipe, it was already up here, it was already on its move down. I was playing very, 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 very low time frame stuff. Like literally, there was like only a 3-minute window that you could have got my price at. Which was either on this candle. There's like a 2-minute window. You either is this candle or this candle. And once I seen this candle engulf, because I was already looking at the liquidity, I was like, you know what? I'm gonna just sell it and see if this high holds. And it has held. So again, does this high hold into the week? It's unlikely. It really is unlikely, but I will hold and see anyway. But I do warn you guys, and I will continue to warn you guys over the next couple of weeks, over the next couple of months. And again, eventually I will be right. Right. I can say that the Bank of Japan is going to change their sentiment, and whether it's in 3 months, 6 months, 9 months, a year, 2 years, 4 years, if I just keep saying that, eventually I'll be right. So take this with like a grain of salt, I guess, right? It's just my opinion. But I am very, very, very firm on the idea that, again, that the Bank of Japan begins to switch their sentiment. Now, there'll be lots of opportunity once they do, right? You don't have to delve in the speculative nonsense that I do, where you try to be super early. I know I'm early. I know that. That's why I keep taking profits, right? Every time this thing moves 200, 300 pips in like an hour, I'm taking my money and running. There's no reason for me not to take my money and run, right? I see the shift happening. That's great. But I'm not going to be like ignorant to the fact that the yen is still weak. And these measures, as you can see, here and here are usually very, very, very short-lived, right? They're easily recovered right afterwards. To be quite honest, this wasn't really even that drastic of a move. For an intervention, I mean, 300 pips. I mean, the last time they intervened, they did like 1,000. So, yeah, it wasn't really it was a nice move, but it wasn't everything, right? But we took our 30% here. We filled these wicks. Beautiful, beautiful play. We'll have to see again what the monetary policy statement of them this week actually is. So let's just see real quick, get a little update on this. I was in my GJ closed out Friday. Perfect, perfect, perfect. Oil, can we go over gold? Yeah, I'll still go over gold. Let's see. Skaggs is a market maker on the low. Can tell me otherwise. I'm not a market maker, family. I just know how to think like one, right? That's our job, right? Our job is not to. Your job is not to be better than them. It's just to understand them. Or it's just to understand them. And like when we say market maker, like understand, there's so many words for that, right? Big money, smart money, market maker, central bank. Right, it's all the same. It's just it's a scary marketable word that somebody attached to the person that currently holds power over the order books, which could be anybody, could eventually be you. You know, you have to compete with George Soros for that, but nonetheless, it could be you. Where do you get most of your fundamentals? Right out of the horse's mouth. That's it. Right from the central banks. There's like if you guys are not going just to the sources, then I don't know what to tell you, right? If you want to know what the Bank of Japan is doing, go read the stuff on the Bank of Japan's website. It's all there. Right? Everything that we do are about the Federal Reserve, right? How we know that they're going to increase interest rates, and how do we know what their inflation target is, and how do we know all of that? Well, it's all in the reports. It's literally all in the reports. Now, a lot of people will not read the report because, again, it's hard, it's confusing, it's not easy. It's going to take you months, years, maybe, to even start to understand how to read between the lines. But nonetheless, that's where you should go to get your information. Or you should at least go somewhere reputable that is translating that information for you. But understand that, you know, you have to cut through a lot of bullshit, right? When you go to Bloomberg and you read their article about what the Fed just put out, there is fact inside of there, but it's shrouded in a lot of biased bullshit as well, right? Excuse my language, but it's just the truth. anywhere you go, whether it's Forex Factory, investing.com, Bloomberg, whether you go CNBC, whatever you guys have in the UK, right? Whatever news source you read it through, they're going to give you the hard facts, which are usually numbers and quotes. And then they're going to give you additional paragraphs of just nonsensical opinion. And you have to be able to differentiate the two. So what you should do is pull up Bloomberg, pull up their article, and pull up whatever the Fed said, whatever the Bank of Japan said, right? Their actual words, their actual documents, and compare the two, and then you'll see where they get their information from, and then you will then also be able to go in and get your own information. And when these news events happen too, we're usually on live streams. We usually go over this stuff too. We read through it. I skim through it. I show you guys what I'm looking for, and you guys can also learn that way. And in case you don't know, let me just real quick, let me switch my screen. Let me just also just make sure that I close some of these other tabs real quick. Sure, let me show you guys too, just how to find, because some people don't even know how to find some of this stuff, right? So let's say, what do we have this week? Maybe we should go to last week. You know what? No, let's go this week. Right, so let's see. If you want to find out where the information comes from, let's pick something good. Where's all the good news, right? So like this, ECB monetary policy statement. If you click on this, or you come in, it tells you what it's about. It'll give you all the release dates. But if you look at the source here, it'll mostly always have a source. 95% of the time, it'll have the source. And it'll always be a hyperlink. So if you click this, it will take you to the actual ECB's website where they actually publish their monetary policy decisions. And you can literally open this up. And then here it is right from the ECB themselves. And you can read through the information. So no matter what you're looking at on investing.com or Forex Factor or anything, even GDP, if you want to see where GDP comes from, again, the Bureau of Economic Analysis, it'll take you right to their website. And then you can see all of the data for yourself, and you can begin to read through that. Again, do you need to go to the website for GDP? Probably not, because all you really need is the number. But when they release something like this, where it's actually a monetary policy statement, and especially when it has this little document icon, that is when you want to come in and actually, read through the data and whatnot. So yeah, just a little tip in case you don't know how to do that or don't know where to find it. It is always linked right on their website. What are you targeting on GJ short? Sorry if you already mentioned it. So on GJ, I mean, at this point, since I've already booked profits at this 165 area, and again, all we did when we tested this 165 area is we just built up more liquidity. So again, additional taps to this is just going to get weaker and weaker. If we do hold all the structure up here, again, this is where I think a lot of the bigger money is scaling out, right? This is like, I think all of this is protected. That's why I keep shorting, and all my stop keeps going above this high, because I think this is truly protected price action. I think there's a lot of money sitting in the books up in this yellow zone here that I'm going to leave on my chart. A lot of protected money up here. There may be a lot of volatility. It may keep coming back, but every time it comes back, somebody is stepping in the market to keep price below this area. And as long as they continue to do that, I will continue to short. So again, we're building up liquidity here. If you were going to go short on GJ, the next shorter term logical target would be below this wick. So I would look at a break of 162.25, and as you're trading below 162.25, you could just begin to find your own exit. Again, I do also like the liquidity buildup that's below here, but I would need to see what kind of effort we come below 162.25 with. But ultimately, again, as you guys know, I am eventually going to look for the break below this 148.80 area. So about 2,000 pips away from about 2,000 pips away from current price is my real long-term target, as long as we continue to hold this 170 area, below this 170 area. And the last trade we did this on was actually on gold, when we were going short, and this is, none of you are going to remember this, but we were going short on gold up here at 1990 areas, again, looking at this sort of same kind of weekly liquidity buildup. right? So we have eventually got this. GJ will eventually spill over and take that liquidity at 148, right? It may not be this week. It may be this week. It's all in the Bank of Japan's hands. It's not in mine, but it does remain an area for us to target. I'll quickly go over gold here. This would be probably the last thing that I personally do in terms of updates. We are long on gold. We were long on gold over there. I went re-long on gold at where's my phone? Let me get my actual entry. I think it's 1623. Let's see. Yeah, 1623.07 and 1622. So I did personally go short. It was Friday actually. At 1622. So I was short up in this area here, right? More or less in this area here. And I went short on this little bit of a pullback. So I went short on this little bit of a pull. Or I'm sorry, I went long. I'm sorry, I'm not short from 1622. Let me make that very clear. I'm not holding 400 pips in drawdown. I'm long from 1622, and I was long with a stop loss of 1618, which almost got hit. I'm gonna be real with you guys. I almost got taken out of these trades. I actually wrote these trades off as a loss. I was like, yeah, rip to this. This is just not gonna work. Luckily, some demand came in at the 1619 area. Again, we held the low beautifully, moved to the upside. Again, my opinion on gold here is that of like EU. I really, this pullback that's currently happening after the weekly open and the gap run up, I don't want to see this push too far. Like, I know Abel was looking at this area down here. He discussed this area down here, I believe it was, or the 1640 area, right? Somewhere inside of here. I don't want to see that. I'm going to just be real. I'm going to apologize to him. I mean, it's not going to change his opinion by any means. We're always going to have our own opinions. But I really would not like to see price come down there. I would like to see price take out this 1649 area, maybe fill out this wick at 1647. But anything much more below this, and again, I'm going to be a little bit concerned that my positions are just eventually going to get taken out. So for me, it would be playing inside of like this area here for buys, preferably right on the wick fill. But I would love to see this kind of spill over and then us get a little bit of a change of character and then come up and fill this again, it's kind of open price. This open price just remains as like a nice target. I do want to remain long on this early week, find my same exit at the end of week. Would love to get out of these at 1686 once we get a push above these highs. All right, once we get a push above these highs, I will look to exit. I will also look at this continuation block here. Let me just delete some of these old lines, which I gotta change my setup again, bro. This is keep having to pull my mouse. Right, so I will look above this continuation block here as well at 1699. So I'll be looking to make my exits above 1688 in this about 120 pip range. As it plays around up here, I'll begin to look at my exits as well. But yeah, hopefully we don't see below 1647. Otherwise, I'm gonna be a little concerned that we're just going to spill over this entire move. That's not the right tool. Right, but we probably just end up spilling over all week long. So yeah, that's how I see the markets, family. Again, I'm looking for continuations of last week, very early week on, looking to exit late week. Again, because I look forward to we look forward to a lot of news this week, which can drive foreign currency interest. But after that, I think the market will be like, oops, we're a little too high, and the Fed is hiking rates next week. So maybe we should reposition ourselves. Let me see. How can we start to understand the reports? That's a good question, and you're not gonna like the answer. But what I'm curious is what you guys think. All right, so how do you guys think you can begin to understand financial reports? Right, write it in the chat. Right, what do you think is probably the best thing for you to do to begin understanding fundamentals? All right, and I would urge you, if you're not sure, I would urge you to look at how you learned price action, right, and the steps you took. I will say fundamentals are a much slower process, but it's not too much different. Reading and doing research. Yeah, that's one of the few steps you should be doing. Absolutely. I mean, if you're not reading and doing research, you're already doomed. All right, that would be like saying, you know, you need to sit on the charts to get technical analysis done, right? So, Jerome, you're absolutely right, bro. Like the answer. Getting into it 100%, studying, continue to read them. Back test. I will say back test. So yeah, I should have thought you guys were gonna say back test. I wouldn't back test fundamentals. I don't like back testing at all, even for technicals. I think even back testing technicals is a waste of your time, to be real. Watch the effect of the fundamental news. I like that answer the most so far. Go search for a wealth of knowledge and let it be refined over time. Find one teacher and copy. So listen, so backtesting wasn't too far off. Go over Abel's Day 3 boot camp? Yeah, probably. If you have access to that, probably. I read the report, then take the terms and research the terms, follow people who could interpret. That's not a bad answer either. Background economic data and projections from officials. Take notes on how the charts react to the news. Yeah, so I would say 20 pip Savage. All right, Michael, Kim, you guys are right on. I mean, even Warren, right? You guys are right on track. What you guys need to do is start experiencing more fundamental events, right? You're not gonna know what the effect of interest rates on the market is until you start sitting down when interest rates come out and you start seeing them. Now, interest rates don't happen often, right? You sit on the chart and you see the same chart patterns day in, day out, right? Week over week, right? And the more you see them, the more you learn to adapt and like, okay, cool. Now I know how to react to this. Okay, cool. Now I know when this comes out, right? So you're only going to get better with time. The problem is most traders waste the first 2, 3, 4 years just ignoring fundamentals. So you could be 3, 4 years in this game, and because you've neglected them and you haven't sat there to give them any time because somebody told you technicals is all you need, which again, I fully support the idea that you can be profitable only trading technicals. You can be. I think it's a much harder journey. You can, but you absolutely can refine technicals down to a science where the fundamentals may impact you a little bit, but they ultimately don't make you unprofitable. But I would say again, a lot of people waste time because they ignore them. So you're only going to see success with with the fundamentals once you begin actually taking them serious and looking at the events for more than just the price action, for the data. All right. I remember when I was like 2 years into the game, and this is like really when I started like taking it serious, right? Because for those of you that don't know, before I was a full-time trader, I used to work for Apple in sales, and I loved it because I used to meet a lot of people. All right, it was really hard for me to quit Apple. I stayed there for longer than I should have in terms of like income, right? But I met a lot of great people there, and I've met in my day probably upwards of like 7 or 8 different people that manage money on a higher scale than most, right? Hedge fund managers, private equity managers, so on and so forth, right? People that actually play in the macro. And I remember this one dude one time, again, he was there just, setting up his phone, was a hedge fund manager, was talking, told him I traded currency. And he asked me a question. And honestly, like looking back, I can't even believe that I was 2 years in the game and I didn't even know the correct answer. Again, because my first year and a half, 2 years, 3 years, I wasted that time. I was technicals only. And he asked me a very simple question, right? What happens to the US dollar when the Federal Reserve begins to increase interest rates, right? Just ask me straight out, right? What happens to the US dollar when interest rates go up? He's like, is that bullish or bearish for the dollar? Right now, you guys let me know in the chat, right? Is that bullish or bearish for the dollar? Let's see if you guys are smarter than me in 2 years in, right? Because he asked me that, and I wasn't able to answer it with confidence, put it that way. It's not that I didn't entirely know. I had like a small idea. Or I'm not, you know what? Let's just say I didn't even know. Because to be honest, again, not a non-confident answer is not a confident answer by any means. It means you don't really know, right? So all you guys saying bullish, right? So when interest rates do rise, that is seen as bullish for the currency. It makes it more appealing, right? As long as it's beating out other central banks' interest rates, that is seen as bullish for the dollar, right? So you guys are already better than I was, right? Which is great. Love that. Love that. So if you guys are jumping in, you're already jumping in with more knowledge than me. But I couldn't even answer that with that much confidence. So for me, it was like, man, like I don't really know. Like I probably should know this if I am dealing in currency. So for me, it was just somebody that was in a position that I wanted to be in, right? It was somebody that was literally managing. I mean, he didn't tell me how much he was managing, but he's a hedge fund manager. So I'm imagining he's managing at least millions of dollars, at the least. Who knows? I realistically who he specifically worked for, how much money he was actually dealing with. But it made me realize right then and there that I need to take that more serious. So now, 7 years, 8 years in the game, yeah, of course I know what interest rates are going to do, and I know how to perceive that. I know how to, play the differentials. I know what to expect from the Fed, and I know when they say they want a target rate of 2% inflation, and that means they're going to have to push interest rates. If you have 40-year record high inflation, you're probably going to get 40-year record high interest rates as a result, right? So take it serious, start looking at more events, dive deep into it. Again, the more you start taking it serious, the more fundamental events you see, the more rumors you listen to, the better. Delve into the unknown, stay a week or two ahead of the market, try to predict, forward test, right? If you know this week there's a bunch of monetary policies coming up, just like you guys go on your charts and you make projections and you say, okay, well, I think price is going to do this. You should also be doing that with the central banks. Okay, I think the central banks are going to do this. I think this. Like you guys see me speculating on the yen in full confidence. Now, the market will either prove me right or wrong, right, at the end of the day, and I'll either learn something from that. I'm like, okay, well, I was wrong, and I'll find out why I was wrong and what could have told me I was wrong, or the market's going to prove me very right, and my confidence level is going to continue to rise. Right? Some of you don't even do what I do on the yen. I look very far ahead. I'm talking about the next 3, 6, 9 months out of what I expect out of the Bank of Japan, based off of their what? Based off their CPI, right? Based off other, indicators, which for me, for the yen, is really nothing other than the CPI because there's nothing else in their economic reports to really base it off of, right? They continue to say that they're not going to increase rates as long as inflation stays below 3%. It's like, okay, well, here we are at 3%. What did I do to first start learning? Exactly what I'm telling you. Exactly. I wasn't scared to formulate opinions. I wasn't scared to not only publicly, but just to myself create ideas and plans. You got to take all the fundamental data that's available to you, and you got to read up on what some of those indicators mean, what some of those percentages mean, what, are is higher spending better or worse for your economy in its current state. People you could pay attention to. If you want somebody who drops a lot of sauce on fundamentals, right? Look into like all the content by Ray Dalio. Great person to start looking into. That's like I won't even overload you with information, but I'll give you that. Somebody that's very good at macro. Somebody that's very good at macro. There are some people that act like they're good at macro. People like Robert Kiyosaki. Like, dude's pretty cool, has some cool content, but like he's what you call biasedly fundamentally based. Like all Robert Kiyosaki cares about is like the death of the dollar. Like there's no other world that he lives in other than death to the dollar. Like he's just that. And again, it's not bad. He tells you to buy silver and gold and Bitcoin, but he has never once addressed the strength of the US dollar, right, over the past year. He's just been continuing to tell people it's a great time to buy, gold, silver, and Bitcoin, which he's technically right. He's not wrong, but he never warned you of the fact that interest rates were going to increase and this was going to happen. He's very one-sided fundamentalist, is what you kind of call it. Ray Dalio deals in both sides. Very great person to follow. Lots of books, lots of content. You just search up his name. There's a billion things you guys can buy. And again, he's not the end all be all. Do more research outside of that. But yeah, that's some stuff you guys could do there. Abel, you got anything to contribute to the fundamental conversation, bro? Any words of advice?
I mean, you're really nailing it all on the head for sure in terms of how to do it. It really is going to come down just to experience, guys. Like, and not just from fundamentals, but from every aspect of trading, every form of analysis. You're only gonna get better through experience, right? Because we can give you guys our exact step-by-step process on how to trade news and how to trade technicals, but you're still not gonna get the crazy, crazy results because you don't have the experience just yet, right? So if you want to get better with anything, any form of analysis, just keep putting in the work, right? The more time you put in, the more experience you gain, the more clear a lot of these moves are going to become for you guys for sure. All right. But one thing from a fundamental perspective, I started taking fundamentals a lot more seriously over the past year, year and a half to 2 years. And that really, really does, it really is a game changer, guys, when you really do fully start to get it and understand it, because it really eliminates a lot of the noise in the markets overall that you normally see from a technical perspective, right? So, I mean, yeah, just continue trusting the process. It really is going to come through experience more than anything. But Skaggs was on the money with a lot of things he said for sure. Let's see. Let's see.
Shout out to that boy Cove in the chat. Appreciate you, bro. I'm glad your trading took off to the next level by just being in proximity, bro. We gonna get you up there, man. And that goes for everybody in the chat that puts in the work, right? I know there's a lot of people that don't even type in the chat that are just on here watching that put in the work too. So I just want to give a shout out to you guys too, because I do know the people that don't like to engage, but they like to watch. Those are some of my favorite people. Those are the deadly people. You don't even know, but they up.
That's a
They're
fact, bro.
progressing every day.
That is a fact. Let's
But yeah, that's all I really have for the week. Again, I don't like to deal in too many theories on Sunday. You guys know I prefer my live trading. I prefer to sit down with you guys live at 8:30 on Tuesday, Wednesday, Thursday. Take a
Mm-hmm.
look at what's actually happening, not like what could happen. Because what could happen doesn't get us paid. That's just the truth.
Well,
Like you could sit here all day, it don't get you paid.
what's your favorite model?
My
Well,
favorite.
not your favorite, but what's your model for your course? Execution over
Oh,
analysis.
execution over analysis. Yeah, execution over
Can
analysis.
you?
Analysis don't get you paid, guys. And the proof of that, if you need proof of that, let me see if I can get you proof. Right. So watch. So let's see. Let's just do some numbers real quick. Let me show you guys why analysis doesn't pay. So look, you can this is what an analyst gets paid, right? Let's see. Pay scale. Average financial analyst salary. So an average financial analyst, right? Someone who deals in theory, right? This could do this or that or this or people that don't execute, right? They just talk a big talk. It's about $63,000 a year. That's funny. That's almost my month, right? And then if we look at money manager, all right, pay, right? Somebody that manages money. Okay, well, average 96,000, but they're still making 50% more. All right, so my point is that money managers will always get paid more. And this is like not even like the appropriate pay scale probably for like an actual. I probably have to switch this up. This is giving me some sort of like finance manager salary. Yeah, this is like not even the tool that I want, the position, however, that I would say. What's a better way to phrase this? Uh, I mean, see, this is like such a hard thing to gauge too. So there you go. There's for an average hedge fund trader, right? Somebody that actually executes, actually gets returns, average of 238,000 a year, right? So my point again is just that the analyst, the person that deals in analysis, in the this could happen, that could happen, the person you see on Bloomberg, they make an average full time income. But the people that actually execute, the people actually that know how to extract money from the market, they get rewarded a lot more, and they can make as low as 32,000, but as high as 1.1 million. So again, you'll always make more if you're somebody that can actually execute and can't just break stuff down. So that's why I prefer to live trade in front of you guys, because that's the real skill. Yeah, that's all I got for the week though, family. Abel, you
Mm-hmm.
want to wrap up with anything?
Yeah, for sure. I mean, family, just so you guys are aware, we will be live Tuesday, Wednesday, Thursday. But the only place that you guys will be able to catch us is on the ProfitSociety.co, right? Inside of the Profit Society platform, family, which is a social media platform for traders, built by traders for every single one of y'all. All right, so you guys can have a place to go to, interact, communicate, ask questions, drop ideas, drop your markups, and ultimately just be in a community that's really going to be focused on helping you truly just get to the next level for sure, right? So make sure to be a part of the platform if you guys are not just yet. You know, we have well over 600 people inside of the platform. We're still technically a part of the beta launch, so it is free for access everything that you guys can see there. So go ahead and take advantage of it. Again, if you do want to trade live in real time and see how we do this thing live, you have to be a part of the platform, guys. So make sure to go be there. And yeah, we look forward to seeing you guys on the inside and, you know, growing with us. All right, but without further ado, family, we do love you guys. We appreciate y'all, and we will see you guys on Tuesday more than anything. All right, so appreciate y'all. We love you guys, and I hope you guys have a phenomenal rest of your guys' night and a great, great start to y'all trading week. All right, y'all, have a great one, y'all.